Purchase applications are up 8.8%, and the aggregate prediction for home price appreciation this year is coming in at 2.2% early in January, and there's a lot to unpack here for people thinking about buying or selling, which we'll get to next. So if you get some value out of the video here, you like what you hear, subscribe to the channel, hit the bell for notifications, and if you want to schedule a call about your own real estate needs, you can do that with our amazing team by using the link in the comments. So we're seeing some really good signs here, and we're going to put these charts up so you can understand exactly what we're talking about early in the year. So first and foremost, people were worried about demand, and we're seeing that purchase applications were up 8% week over week. That is the lead indicator for demand in the marketplace because that's based on mortgage applications getting filed, and you can only do that when you have an executed agreement of sale. We've also seen that the aggregate home price appreciations, and we'll have Nick put these charts up here while I'm talking, is up 2.2% based on the expectation for what home prices are going to do year over year. And this is not just one prediction. This is many predictions. We have a few people at the bottom of the chart you can see here, a few of these experts, if you will, are predicting prices are going to go down a little bit. The vast majority are predicting prices will go up, which I totally agree with. And here's the caveat, and this is what it means for us locally here in the greater Philadelphia area. It's all based on inventory. And when you look at some parts of the country, they're above those 2019 levels of homes for sale. Other parts of the country, like the Northeast specifically, and even more specifically the Metro Philadelphia area, are down close to 50% or even higher compared to pre-pandemic numbers. Here's the numbers locally for our marketplace. Chester County inventory is down 65.6% compared to 2019. That's the number of homes for sale. Montgomery County's down 54.8%. Delaware County's down 38.2%. And the city of Philadelphia is up 14.9%. So there's more homes for sale in Philadelphia than in 2019. So it shows you how different the markets are here. And that's why the local data really matters, and you've got to understand what's happening in your neighborhood, on your block, in your county, in your school district, in your township, whatever the local municipality is. That's going to be the most important data. And what that tells me is we're going to be on the better end of appreciation in the greater Philadelphia area. So you're thinking about selling a home. How does all this data affect you? One, we're seeing demand is up. Purchase applications coming in strong is great news. That means there's homes selling in the marketplace. And because it looks like rates for mortgages are going to be pretty stable this year, that we're going to see stable increases in prices. 2, 3, maybe 4%. With those numbers and this very early data here that we have, it tells me that there's buyers out there waiting for new properties to hit the market, and they don't know when they're going to come up. And when they do, they're going to be ready to pounce. Now, what we've also seen with data is that inventory is increasing, and I'll have Nick share these charts as well. It's up compared to where we were last November. We're up on average 15 to 18% in the suburbs, and we've seen a flat inventory level in Philadelphia just over the past year. So more homes are coming to the market, and we're still below the 2019 numbers. So for sellers, you want to be out there when there's not a lot of competition because the demand is so strong. So what that means for someone thinking about selling is that I'd really be considering having planning meetings now for March, April, May, June, and July so you can get the house prepped and ready to go. That could take anywhere from a week to a couple months, depending on what your house looks like. You might need some light cosmetic work. It might be decluttering. We don't know what that is, so that requires an on-site visit. You want to have the planning meetings now for later in the year so that you're ahead of the market and can get to the market as soon as possible. It's very clear we're going to be seeing a traditional spring market in 2024. We want to make sure any potential seller takes advantage of that. So I'd be looking at getting ready now if I'm a seller. That's the big takeaway from all this data. Now, what we're looking at for buyers is you don't want to wait until April to start your home search, or May or June, or wait till after the Super Bowl, even though it's only a couple weeks away now. What you want to do is have a financial planning meeting right now. Understand, hey, here's where my payment's going to come in. Here's how much cash I have to work with. What options do I have? A lot of buyers think they have to put 20% down on a home. That's just not the case. We want to make sure that you know that you can go in as little as 3% down. And there's some first-time home buyer grants that are out there. And there's a lot of good things happening so that you're understanding what your financial obligations are. You can also get clear on how the process works. Get your credit in order if there's anything you got to pay off, any silly debts, stuff like that. There's a lot of benefits from planning sooner. And what we're seeing is the market is starting to pick up as we're heading into February here, and the indicators are there. Purchase applications are up. Prices are going to be going up, so the sooner you buy a home as a buyer, the lower price you lock into. And with rates predicted to be pretty stable, and we'll see what the Fed says this week, that's going to be a very clear indicator of what the outlook's going to be the next 2, 3, 4 months. So we're seeing the market start to move. Here's where you don't want to be as a seller or a buyer. The person that gets left behind because you're not informed about local market conditions, the selling and buying process, the current lending environment, and obviously how your goals are going to be affected by all those things. So do yourself a favor. If you're not prepared for that, schedule a call with our team in the link in the comments, and make sure to subscribe and hit the bell for notifications if you got some value out of this data and how it affects real estate decisions in 2024.